What's up, YouTube? My name is Ty, Financial Advisor. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is RDBX, Redbox Entertainment. This finishes at $10.10 today. That is down 12.93%.
And it's gone.
So we've been covering this stock for a couple months now, ever since this squeezed from $2 to $11. It pulled back, squeezed again, and still a very popular stock on social media. Ape's still in here, trying to squeeze this. This did make top 10 on StockTwits today, had over 4,000 mentions, so once again we're going to analyze it. So no company-specific news to justify this price action today. It just seems like momentum is cooling off. It seems like the squeeze is over, for now at least. People taking profits, and shorts coming in here, and just the overall markets didn't do too good today. Alright, let's jump right in. Let's go ahead and analyze here. So first of all, this appears to be a cup and handle in the making. Bottom of the cup being the low of 160. And there can be multiple possible tops. It can be 1840, which I do think is the most realistic top. But it can also be 1925, 2005, or even the high of 2720. But those are all bullish indicators. That is telling us that the stock should come back up to one of those tops to complete the cup. In the previous shows, I did point out that we had multiple bull flags developing here. Here was the first one, broke out. Here's the second one, broke out. And then it appeared like we had a third bull flag developing, and that got rejected. But actually now we have one giant bull flag developing. Here's the flagpole, here's the flag. So that would be a bullish indicator that is suggesting that this stock may break out to the upside. There was a gap down at 1370, so that is a bullish indicator. That is telling us that the stock should come back up to 1370, eventually to fill that gap. And then we had a gap up at 860. So that would be a bearish indicator that is telling us that the stock should come back down to 860 to fill that gap. And both of those gaps should be filled in the short term. And in the aftermarket here, this is pulling back down to $10. So if this aftermarket action holds, that would be a bearish indicator that is suggesting that tomorrow the stock will sell off. And down here on the MACD, the moving average convergence divergence, the MACD line has crossed the signal line, so that is a bearish indicator that is telling us that it may be time to sell. And if you guys want to follow along, the link to the chart is in the description down below. So right now this is sitting on the support of 1010, which it finished at today. So if this goes to the upside, next levels of resistance would be 1030, 1050, 1090, 1125, 1170, 1205, 1240, 1270, 1305, 1340, 1395, 1440, 1475, and then 1555. There is resistance above 1555, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 980, 945, 915, 880, 850, 820, 790, 765, 735, 710, 685, 660, 640, 620, $6, 575, 560, 545, 520, and then 505. There is support below 505, but we're not going to discuss that right now. So right now at the current price, 1010, the channels to the upside and the downside are pretty wide. So expect significant price action either way this goes. However, if/when this breaks 710 to the downside, the channel starts to narrow. So expect a significant decrease in price action if/when this breaks 710. RSI is currently at 55. So that is pretty average, a little bit above average. So according to the RSI, the current price of 1010 is around fair market value. Maybe it should be a little bit lower. And this did 8.5 million in volume today, way above the average of 4 million. So this sell-off today was confirmed by the volume. Okay guys, just my opinion, not financial advice. So not much has changed since we last discussed this stock, I think 2 weeks ago. It's really just been consolidating since then. The stock seems like it doesn't really know what to do at this point. We have an equal amount of bullish and bearish indicators. We have bullish indicators in the cup and handle, bull flag, gap down, and we have bearish indicators in the gap up, MACD, and aftermarket action. And we have a neutral indicator in the RSI. So overall, it is pretty hard to tell which way this is going to go in the short term. But I think what's important here is that, again, there's a gap up at 860 and a gap down at 1370. So at some point, it's going to have to come back down to 860 and back up to 1370. Just a matter of which one's going to happen first. Honestly, $10 isn't such a bad entry. Very average entry, according to the RSI. But like I said, this should come back down to 860 at some point. So I think if you're a little patient here, you should be able to enter at 860 and lower. So I can't support going long at 860. And if it pulls back, then you can just average down at the supports that I mentioned before. And best case scenario, it comes back down to 860 before it goes back up to 1370. If that's the case, then from 860 up to 1370, that should be around a 60% upside potential. So I would say going long at the current price, $10 would be a medium risk, medium reward play. It's an okay play, nothing too special. but I think going long at 860 would be a low risk, high reward play. So yeah, going long at 860 definitely worth a shot in my opinion. And again, I would sell at 1370 where the gap is. Now, if you want to go short, not financial advice, I personally would not do that. $10 not a bad entry on the short side either. Very average entry. And again, this should come back down to 860 to fill the gap there. And from the current price, $10, that would be around a 15% downside. So already some pretty decent downside potential. But again, at some point, this should come back up to 1370 to fill the gap there. And I think that would be an excellent entry. So I can't support going short at 1370 and higher. And ideally, this comes back up to 1370 before the gap fills at 860, because that would mean you could enter at 1370 and cover at 860. And that would be about a 40% downside potential. So I would say going short at the current price, $10 would be a medium risk, medium reward play, but going short at 1370 where the gap is would be a low risk, high reward play. So yeah, $10 not a bad entry on the short side. You should be able to make some decent money, but personally, I would try to short this down at 1370 and higher. And that should be a relatively easy 40% on the downside there. So pretty straightforward, guys. This is still a popular retail stock. Ape's still in here, although it does appear like the momentum is cooling off. Stock is trading sideways at this point. Doesn't really know what it wants to do. So let's see what happens. But yeah, at some point, it's going to have to come back down to 860 and back up to 1370. So if you want to go long, the current price, $10, not a bad entry, but I think 860 would be a much better entry. If you enter at 860, there's going to be about a 60% upside potential. So I would support going long at 860 and lower and selling at 1370 and higher. And if you want to go short, same thing. $10 not a bad entry, but if you're able to short this down at 1370 and cover at 860, that would be the most ideal situation. That should be a relatively easy 40% to the downside. So there are opportunities to make money on both sides here. Bulls make money, bears make money, pigs get slaughtered. So sorry to everyone who lost money in the stock today, and good luck to everyone currently in the stock and to everyone looking to take a position. This is RDBX, Redbox Entertainment. Thanks everyone for watching today. I appreciate you guys. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. You apes already know, diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace out.